So if you hold XRP and you're on Twitter or YouTube, you're most likely seeing this fundamental development today from your biggest influencers that are like, oh my gosh, breaking, Gummy, or whoever you pronounce this organization is buying $2.5 billion in yen worth of XRP. And that's like super bullish, right? But nobody has really covered in detail, like we do here in the CYPRX Wealth 28 Club, what this means and why this is so important, and the doors that this opens for not only XRP enthusiasts, but for institutional adoption of XRP in the DeFi ecosystem. So all right, yeah. So this is Ilio Trades. He is the co-founder of Black Hole, which is the fastest growing decentralized exchange on Avalanche. And just listen to what he says about DeFi. This kind of just like aligns with what we've been trying to tell people. You know, institutions are coming to DeFi, and DeFi is going to be a top performing asset class or niche category in the crypto asset class.
Okay.
Building the stuff that they know is going to get much more expensive.
So what do you think outperforms in the next 5 years? Like how are you playing?
So, I mean, to me, every single law that you're hearing about being proposed, stablecoin legislation, DeFi regulation, change to the SEC, you have to think to yourself, what are the actual innovations within crypto that already have product market fit? And number one should scream at you, right? It's DeFi, right? That is the biggest, most obvious thing. That is a crypto native innovation that does not exist in the normal world. You can't do DeFi in TradFi. You just can't do it, right? DeFi itself, I think, has been undervalued because of the regulatory uncertainty. And so now that you're seeing the laws being passed around the Clarity Act, the Genius Act, the anti-CBDC bill, all of these laws scream to me Ethereum DeFi. Right. And yes, every other L1 too, like Solana, DeFi, all that stuff, but primarily Ethereum DeFi because it's the most trusted chain. And you're seeing the reason why these big institutions choose Ethereum over Solana. Now, to me, looking at that is enough of a world lens that for right now, I think you're going to see, and it has been the case, I've been screaming about this for the last few months, DeFi is going to reprice because it's now going to have the total addressable market get way bigger, right? The addressable market for a DeFi protocol now includes every traditional market because they want to put every market on chain. So in theory, DeFi itself is, when you look out 10 years, could be 10 times bigger, could be 100 times bigger. It could be a lot bigger, right? And so that's where I get really excited. I think DeFi is one obvious place. Stablecoins.
Yeah, go ahead. I didn't know if you wanted to unpack that, bro. He said a lot of good, juicy stuff.
Man, he said a lot of good, juicy stuff there. And I'm almost thinking now, like, because I haven't seen it yet, but I wouldn't be surprised if we do see it. But once they tokenize stocks, as opposed to, you know, going on your Robinhood account or Fidelity account, and you just have your account there and there's your stocks. But once they tokenize it, now you're able to use that liquidity for possibly a liquidity pool in DeFi, right? Or even, you know, just lending it out and borrowing against that money as well. Like, yo,
sure.
Massive.
Sure. What do you do when I get to this portion of the call today? That's exactly what the elites have been doing. They don't freaking sell their assets. They freaking lend them out, borrow cash against them, and repeat the cycle. That's what they've been doing. And they've been doing it. They've been doing it in traditional markets with stocks and real estate and art. And now DeFi and crypto is about to make it all so much easier. So much easier.
So much easier. Dang.
From a wallet, straight from a wallet. No intermediaries, no central organizations, none of that, bro. Just straight up from a wallet in the comfort of their own multi-million-dollar mansion, chilling, swapping it right there on their phone.
And I wonder what wallet that's going to be, huh?
The ones that are institutional grade ready and built for both retail and institutions. And we know which ones those are.
Yeah, that's facts, dude.
WebAuth.
WebAuth wallet.
All right, listen to this dude. The last clip I want to play. He talks about how just DeFi protocols, particularly, will be gaining institutional traction.
Returns to the market. That's where you get the sort of beloved altcoin season, where all kinds of stuff starts popping off. But what I'd say is that if you take a sort of 5-year view of the markets, it's likely that DeFi protocols, like the elite DeFi protocols, will gain institutional adoption. And that means that they'll get passive bids from Wall Street that will probably allow them to continue to grow outside of this traditional sort of 4-year cycle, right? They'll probably be able to continue to grind up in market share over time, like you would see with an equities play, like a nice stock, as opposed to, hey, once every 4 years, we see this thing go to the moon and then die, which isn't really good for adoption, right? Because you have essentially a lot of blood on the highway. And then in the meantime, you have a lot of people capitulate because they can't wait that long. And so I think that it will be very good to see like a Mag 7 of DeFi emerge. But I also think that you'd be foolish to ignore the fact that all the other categories, memes, AI, gaming, NFT, all that stuff is coming with it, right? And there will be seasons for those, and it'll be harder than in the past, but those seasons will come for sure.
Yeah, exciting times, and we have kind of
right. So, just interesting perspectives from people that are building out leading protocols in this space. This guy stems from one of the leading protocols on Avalanche. So just hearing some perspectives from industry leading experts that mirror mine and Aqua's in this space. Now's not the time to be ignoring DeFi. So let's hit it off with the intro today and start today's podcast. What is going on, everybody? Welcome back to another CYPRX Well 28 Club podcast. I'm your host, CYPRX, here with my co-host, Mr. Aquaman. Today, we're going to be diving into some groundbreaking developments in the DeFi ecosystem, particularly focusing on XRP and XPR developments, and also, some Metallicus ecosystem developments surrounding HBAR, so on and so forth. We'll get to that. But in a nutshell, developments that prove that DeFi is something that you cannot afford to ignore in this digital era. In today's world, your assets should always be working for you. Now is the time to start educating yourself so that way when regulatory clarity comes and emerges and the environment fully aligns, you're ready and prepared to earn yield alongside the institutions that are, for a fact, based off of what I'm going to share with you guys today, going to be earning yield on their digital assets. But with the right knowledge, you will never have to get back into traditional finance. That's the main part, right? The main key takeaway is that we're accumulating all these digital assets, these utility assets, not to get stuck back in traditional fiat systems. And that's the world and the environment in which we're headed into today. So we're going to go over some of those tools that you guys have at your discretion now to become your own bank. None of this is financial advice. Let's dive in. Aquaman, what's going on, brother? I already asked how you're doing, but it's good to hear that people know how you're doing.
Yeah.
How are you, bro?
Man, I'm great. I can't complain. Living great. And, with what he just said too right now, I'm just curious to know what he defines as an elite DeFi protocol, right? Like, who is considered elite? Like, I'm just curious, you know what I mean? So
Yeah, absolutely. I mean, I think ones that align with regulatory compliance, KYC, AML, all that stuff, at the end of the day, ones whose infrastructure isn't jacked up via their back-end infrastructure with the internet that they run on and whatnot, all that stuff, the research that we do at CYPRX, those are going to be the elite protocols. And it's unfortunate, man, but there's a lot of protocols out there that don't meet the requirements that will garnish institutional adoption, but they have a lot of TVL right now.
Billions in some cases. It's kind of crazy.
Lots of questions in the chat today. I'm going to refrain from answering questions. Somebody asked me, what do I think about the market sentiment right now? We went over that in like an hour-long Zoom call this morning with the private community. So yeah, tap in. If you don't know what's going on in the market right now, why the market shed a couple $2 billion today, over 100, tap in, lock into the fundamental aspect of this community, because we share those things on private calls every single day during the week. So yeah, let's dive in. I want to get over to some of the groundbreaking fundamentals that we have to share today. And we're going to talk about some milestones that have been reached on the loan protocol this week that are substantial in terms of TVL. Bro, first off, is your Twitter doing this? My Twitter continuously unfollows people automatically, and then I'll follow them. Like, I guarantee if I go over to your X account right now, it says that I don't follow you, and I'll follow you, and then it'll just unfollow. I don't know why.
Yeah. So it's telling you that, it does the same thing. But like, if you click on it, like the actual profile, you're actually following it. But for whatever reason, there's like a glitch where it says, hey, follow back for whatever reason. But yeah, it's been
like I
doing
can
that
see right here. It's recommended me. See, look, it just changed. You saw that live?
Yeah, literally, it just changed.
I was gonna say, because I know I follow Sean. He's on the call right now, and it just said follow back, and I'm like, what the heck? And I noticed that multiple times. Anyways, off topic. So in this post, I said here, This is the future. All of your assets should be working for you. Understand now. So understanding these things that I listed on this post is what's going to set yourself up in your future family bloodline for success. However, if you choose to ignore your education now because you're lazy or fearful, then you risk being left behind. Lending, borrowing, staking, liquid staking, running a node, running a subnet, liquidity providing, yield farming, real world assets, vaults, fractional ownership, 24/7, 365, instant finality, and in some cases on certain blockchains, feeless, compliant, and regulated. These terms should be at the top of your priority list, and the doors of wealth, if they are, will open up for you in your family bloodline, right? And I actually reposted one of Sean's posts here where he talks about how he utilized lending to pay a personal expense, right? And so I don't want you guys to think that I'm just making this up. No, financial institutions are telling you guys that you need to enhance your digital literacy. This is not just a perspective that I'm trying to promptly promote to everybody because I woke up out of bed and I'm like, oh my gosh, you guys should enhance your digital literacy. Take this from a bank, right? So in this post, I said here, if you're still ignoring the shift to digital finance, just know that banks are not. Here's a doc with the Iowa Bankers Association openly telling people understanding how to navigate digital tools securely and effectively is essential. By enhancing your digital literacy, you can build a strong, adaptable financial foundation for 2025 and beyond. They're warning you because it's optional. They're warning you because everything is going digital, and those who fail to adapt will be left behind, right? So it's optional whether or not you progress in your education or you just ignore it and think that DeFi is a scam. Check this document out. These are tips provided by the Iowa Bankers Association. And here it says, as technology transforms the financial landscape, digital financial literacy is more important than ever. With more consumers using digital tools such as mobile banking apps, digital wallets, and online payment systems, understanding how to navigate these platforms securely and effectively is essential. So this isn't some perspective from some random influencer on the internet. This is coming directly from the Iowa Bankers Association. Down here, it mentions the digital world offers unique opportunities for managing your money, but it also requires a proactive approach to ensure that you're staying secure and making smart choices. By enhancing your digital financial literacy, you can build a strong, adaptable financial foundation for 2025 and beyond, right? So I don't know if you had anything to say on that, Aqua.
No, I'm actually looking for this this share that was shared with me, because when you had mentioned like the digital apps and all that stuff, Metallicus got basically nominated for like 2 different awards when it comes to like just this new Web3 tech that they're giving to these credit unions to start testing out. So clearly they're testing it out because they're literally a strong candidate to win 2 different awards in 2 different categories. Once I find it here, I'll share it with everybody here. So hold on.
Bet. Well, while you're doing that, I want to dive into some recent developments in terms of DeFi related topics surrounding XRP. So if you hold XRP and you're on Twitter or YouTube, you're most likely seen this fundamental development today from your biggest influencers that are like, oh my gosh, breaking, Gummy, or whoever you pronounce this organization is buying $2.5 billion in yen worth of XRP. And that's like super bullish, right? But nobody has really covered in detail, like we do here in the CYPRX Wealth 28 Club, what this means and why this is so important, and the doors that this opens for not only XRP enthusiasts, but for institutional adoption of XRP in the DeFi ecosystem. So here's the post from Gumi themselves, or Gummy, however you say this, okay? And I broke this down in detail, what most are missing about this announcement. So pay attention, because this is huge. And it's not just about the investment into XRP, but what they plan to do with the investment that is allocated into XRP in those XRP holdings. So months ago, Gumi, and again, I apologize if I'm freaking butchering that name. That's what it looks like. It looks like Gummy or Gumi, this Japanese organization. Gumi and SBI Holdings partnered to launch a crypto asset fund, and this was months ago. What many overlook is that SBI is now the largest shareholder in Gumi at 22.46% after investing over $52 million into the organization. Fast forward to today, Gumi announced the purchase of $2.5 billion in yen worth of XRP. Their statement directly in their post says that it was aimed to expand revenue opportunities, which again, for some odd reason, most influencers that reposted this as some huge bullish event completely went over their head. Just like when David Schwartz announced the AMM feature at XRP Las Vegas back in 2024 and said that you could provide liquidity with your XRP. Nobody raised their hand and was like, what do you mean, David? Right? It's the same thing. This stuff just flies over the XRP army's head because they're not used to DeFi. But this is a huge statement. This lines up perfectly with SBI's broader strategy. Well, what is SBI's broader strategy? It says right here, their partnership that was announced months ago revealed internal trials that outperformed simply holding Bitcoin by using DeFi-style methods like staking, DeFi income generation, and rebalancing digital asset positions. So when you connect the dots, it is clear that this partnership and this announcement is not random. Think about it. Over the last year, for the first time ever, we have been looking at XRP DeFi capabilities coming online: lending, borrowing, yield farming, and liquid staking. When you connect the dots, it sure looks like XRP will be one of the assets that they put to work inside this fund. We keep warning people that institutional money needs yield. They will 110% participate in DeFi strategies, and they will 110% use XRP in these strategies. This cannot be ignored. It's time to learn DeFi. And so here in this post, you can see from articles from months ago, it says the Japanese mobile entertainment provider Gumi established a strategic partnership with other Japanese firms, including SBI Holdings. Through the issuing of additional shares with the value of 52 million, SBI Holdings will increase its position in the firm to 22.46% and become the largest shareholder. Then here it says, Gumi will jointly establish a crypto asset fund with SBI Holdings to manage listed digital assets, leveraging their combined expertise in blockchain and finance, according to a Wednesday filing on the Tokyo Stock Exchange. Then down at the bottom of this post, it says, management will be held by a new limited liability company in Tokyo with SBI Holdings, a 51% stake in Gumi's blockchain subsidiary, GC Labs, owning 49%. Gumi said the decision follows a successful internal trial that outperformed Bitcoin price movements using strategies such as staking, DeFi income generation, and rebalancing. And it aims to eventually expand the fund for retail investors. So it's literally telling you guys that retail investors are going to be able to participate in these strategies as well. Then in Gumi's announcement, if you look at the specific highlights in their announcement from today, what does it say? Our company has resolved to purchase $2.5 billion in yen worth of XRP as part of a growth strategy for the blockchain business, which I already just read a little tiny article on. Through contributing to the expansion of the XRP ecosystem, which we know the DeFi ecosystem in the XRPL is relatively mute, pretty much non-existent, less than $100 million, which plays an important role in the internal remittance and liquidity network strategy promoted by SBI Holdings, then underline that says, we aim to expand revenue opportunities in that business. Revenue opportunities, right? That is yield generation, earning revenue, turning idle assets, bro.
Yeah, there's no other way to, that is the way.
There's not one other influencer or person that covers XRP on the internet that reposted this announcement today that broke it down for you guys like this.
Yeah, this is a hell of a breakdown.
So moving on, because people will be like, oh, institutions are not going to use DeFi. Well, check this out. In this post, just to prove you guys that this is happening, and it's happening with organizations that have already announced yield generation strategies on XRP, institutions are not just entering crypto, they're optimizing it for yield. Galaxy in 2025 integrated with Fireblocks, unlocking staking access for 2,000 plus financial institutions. Let that sink in. These institutional clients can now stake directly from Fireblocks without ever moving assets off the platform, tapping into Galaxy's validator network, trading and lending infrastructure. So here, this is the announcement. This collaboration allows institutions to participate in secure, scalable staking while exploring advanced strategies that tap into Galaxy's integrated trading and lending solutions, transforming passive staking into a capital-efficient, reward-generating strategy. Then if we come over to the official announcement on their LinkedIn profile and we look at who's on the announcement, it says, we're excited to announce our integration with Fireblocks, unlocking Galaxy's institutional staking platform to 2,000 plus financial institutions. Clients can now stake digital assets directly from Fireblock's vaults without moving assets off platform. This marks our third custodial integration of 2025, following partnerships with both Zoidia Custody and BitGo. And I want to highlight the name BitGo right there, because what happened in the middle of 2025 with BitGo and Vivo Power? Well, if we go back in time, Vivo Power and BitGo announced a partnership. Says right here, BitGo, the leading infrastructure provider of digital asset solutions, and Vivo Power, a publicly traded company that recently announced a transition to an XRP-focused treasury and decentralized finance solutions company, announced a strategic partnership. And then if we go over to what Vivo Power announced, June 10th, 2025, Vivo Power and Flare launching the definitive strategic partnership to deploy $100 million in XRP for institutional yield, right? This is happening at a very rapid pace, and it might not seem like it now because price action clearly does not reflect these bullish fundamentals. But if you are not using the time right now to study DeFi, that when price action really does mature and come into fruition with all these high-end Moonboy price action targets on how to maintain positions in your digital assets and earn yield on your assets, you risk selling for fiat and getting stuck back in the traditional system.
Yeah, facts, dude. Facts. It's crazy how you full circled this, bro. You're always full circling stuff, though. So
I got a memory of an elephant, bro. I'm not gonna lie. It's a gift and a curse. Last but not least on the XRP headline, right? Because this just dropped today, just to go on and solidify that this is happening in real time. This is from August 29, 2025. Flare expands institutional adoption as Everything Blockchain Inc. joins XRP-Fi standard for treasury yield. So here's yet another organization as of today announcing an accumulation plan for XRP to generate yield with their XRP. So think about it. You got all these retail traders that are like, oh my gosh, I'm going to sell my XRP when it's a high price at some point in time in the future. But then inversely, you have all these organizations and large institutions that are like, we ain't going to sell our XRP, and instead we're just going to accumulate a yield treasury strategy and earn yield on our XRP in the future.
Facts. That's wise too. That's
Yeah.
So
here this reads: Flare, the layer 1 blockchain for data and interoperability, announced today that the Everything Blockchain Inc., a US listed public company, has entered into a memorandum of understanding to adopt Flare's institutional grade XRP-Fi framework for its digital asset treasury. The agreement makes EBZT one of the first US public companies to deploy XRP in a compliant yield-bearing structure, joining NASDAQ-listed Vivo Power International PLC, which committed $100 million in XRP to Flare's ecosystem earlier this year. Together, these moves demonstrate XRP-Fi's growing momentum as the emerging institutional standard for corporate treasury yield. Then down here at the bottom it says, for EBZT, the decision reflects a shift in how public companies approach blockchain participation. EBZT aims to show how XRP can serve as a compliant, yield-bearing asset rather than a passive holding asset. Arthur Rosenberg, CEO of Everything Blockchain Inc., says this is about unlocking true financial utility of digital assets like XRP. So hold on. So this guy is saying this is what's going to unlock the true utility of XRP. Yet prior to this recent development and everything that's been happening in the XRP community, why does the XRP army still think that XRP's primary utility is cross-border remittances and payments?
Exactly. That's a really good point. Really, really great point. And we've actually been pointing that out for over a year now, that it's always been DeFi. DeFi is the true utility. So yeah, talk that talk, bro. Talk that talk.
We'll be called crazy, but I'm telling you right now, once you see that TVL increase in the DeFi ecosystem on the XRPL, we will see high prices on XRP, and it will not be because XRP is being utilized for cross-border remittances or to solve some liquidity crisis or whatever the heck people are speculating on. It'll literally just be because all the dormant XRP that was sitting in centralized exchanges in years prior is unlocked and being actively utilized in the DeFi ecosystem.
Yeah.
It's not complicated. It's pretty easy, actually. You understand the mechanics behind it.
Yeah.
So I just wanted to share that because these are all ongoing developments that just prove that now is the time to start learning about DeFi and the XRP community. Most people are ignoring it because you have influencers that are like, oh, DeFi is still a scam. It's still unstable. It's not realistic. XRP can't be staked, blah, 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 all this stuff. ignore them and just do the research, right? That's all that you guys should be doing and focusing on right now. You don't have to deploy your XRP into DeFi to learn about it. You just need to read documents and watch videos. That's it, right? So that's my spiel in terms of XRP, right? Now, coming over here, this was a really great post from Paul Gray, right? Shout out to Paul Gray. Sometimes he taps into these podcasts. If you're listening, Paul, this was such a great post where he said, imagine having the financial freedom to instantly open a line of credit using your digital asset holdings as collateral, no forms, no approvals, no drama, instantly get USDC in your wallet using HBAR, XRP, BTC, or ETH holdings. That is the power of loan protocol.
Literally. Quite literally.
Yeah, this post was absolutely powerful considering Loan Protocol's recent milestone reaching $50 million in TVL.
This is massive. This is massive because I remember when it was only like 5 to 8 million only, and now that it's 50 million is mind blowing.
Bro, I'm gonna be completely honest, and this is peanuts compared to what's coming.
Yeah, you're absolutely right about that too. Absolutely.
So I don't want you guys to take into consideration what myself and Aqua are saying. We always like to just show you guys people with credentials that have validity in this space that actually stem from organizations that work directly with institutions. This is a panel discussion from a month ago, has 62 freaking views, people. And I guarantee you, honest to God, because when the researchers sent this video in the CYPRX Discord, it had like 12 views.
Yeah.
So the 62 views on this video are probably all from people in the CYPRX community. I'm just going to go outright and say that.
Yeah, most likely.
But this is Max Boonin. He's from this organization, PVO or PVO1. If you guys don't know what this organization is, PVO1. Long story short, PVO1 is building the next generation platform for debt capital markets. PVO is the first regulated on-chain debt marketplace, which allows institutional investors and issuers to access the primary and secondary bond market in a transparent and efficient manner. So they're a regulated entity, right? So listen here to what he has to say, considering what Paul Gray said about pretty much lending out your digital assets and the freedom to do so, opening up a line of credit using your digital asset holdings as collateral. Okay. Because here he goes on to talk about how utilizing your crypto as collateral is quite important. And it will be emphasized in the future more and more as we progress in this digital asset transformation. Take a second here and listen to what he says.
And kind of how the discussions were at that point.
Work now? Yes, all right. A quick presentation. My name is Max Bonen. I am at a small tokenization startup called PVO1. And before that, I was at B2C2, one of the main dealers in crypto. As Nicolas said, we issued a few bonds on-chain directly with B2C2, and we are working on a new one that is secured by crypto collateral. When we say issuing on-chain, it means that you send your stable coin into a smart contract, you get minted a token, as you do for any other DeFi platforms. And then the token that you get is a bond, so you can transfer it permissionless. And at the end of the time, the duration of the bond, you go back to the smart contract and you get your interest plus your principal back. It's very simple, the economics of a bond, except that it's on chain with your MetaMask wallet, etc., etc. I think what's important here is two things. One, we want to do another one which has crypto collateral. So when we talk about unlocking collateral, I think it goes in both directions. The first one is that there's lots of unused collateral in crypto that you want to be able to use to raise capital. The dealers, such as Keyrock as well, they're very fond of that because they have typically excess crypto collateral and needs for stablecoin or fiat funding, especially in times of high market activity. So the ability to use crypto collateral to raise funding from within crypto or outside of crypto, that is quite important. I think there's a big trend there that crypto is going to be used more and more as collateral, is going to be more widely accepted. I think the Trump administration just signed some executive order a week ago saying that they're going to force the two federal lenders to accept crypto for mortgages. We'll see what the details are there, but it's going in that direction for sure. So that's one thing.
So you guys heard this gentleman here that works directly with financial institutions say that, you know, crypto as collateral is extremely important. It's going to be used more and more. Aqua, what's your perspective on the future and lending and borrowing with crypto? Like, do you see a future where people, say, for example, the younger population, especially those that are investing in crypto now, go and take out a traditional loan from a bank to buy a house or to buy some expensive ticket item, or do they lend out their crypto on a platform like Loan Protocol to buy an expensive ticket item?
Yeah, I eventually see, you know, all loans being tokenized and being on the loan protocol or other borrowing and lending protocols that are, you know, compliant, aligned with BSA compliance and, you know, all that jazz. But yeah, I eventually see, you know, student loans, auto loans, credit card loans, you know, HELOC loans, every type of loan possible will be tokenized, and it will be in that, you know, that lending and borrowing category. And that's why we've heard so many people, you've even played a couple videos of people saying that lending and borrowing is where all the liquidity is really, really at. Like that's where it all lies, right? Even bigger than trading. So, yeah, and that's why, you know, the loan protocol is a sleeper. Like the price of the loan protocol is such a sleeper compared to like where it's going. It's peanuts, like you just said earlier, 50 million. It's a great milestone, but it's complete peanuts compared to where it's going to go. Because, you know, I was just looking at 5 different credit unions this past week when I was getting the Zoom call ready for the Thursday Zoom call that I run inside the Wealth 28 Club. And those 5 different credit unions had their loan tab, and the categories that came up, there was just so many different loans that they offered through that credit union. And I just kept thinking, like, once this is tokenized, this is all coming to the loan protocol. So yeah.
Yeah, it's pretty wild what we're going through. It's so funny that as soon as you said that, one of our viewers is always on the call, X Vision, literally said right when you said it, they posted it in the chat at the same exact time. Most of the liquidity is going to come from borrowing and lending.
It's massive, bro.
It's so great to see. I'm not gonna lie, dude. It's hard to shake the mindset from traditional finance, because even just the other day, I kind of like caught myself slipping, because I'm in the process right now of adding another, or possibly adding another investment to my real estate portfolio, another property to my real estate portfolio, because in the area where I currently own real estate up in the lake on the East Coast, there was a property that opened up and became available, and it's like $200,000. And if you put that on Airbnb, the revenue that you can generate from that property is way more in terms of annual income than $200,000. So I was thinking about buying it, and I'm like just doing a little bit of research onto like what bank I could possibly go get a loan from. And I like stopped myself, and I'm like, yo, if I want to buy this property right now, I could probably just go take out a loan on Loan Protocol right now and just go put my freaking H-bar on there right now, which is valued over $200,000 right now. And I was just tripping because it was weird how, even though I know about all this stuff, I was still searching like, where could I go get a loan from? You know? But I had to like snap back into it. And I was like, if I really want to go get this freaking property, I could go get it like tomorrow with the
literally
protocol. Yeah.
Literally. And then you know the rest. You know the rest of what you do after that. You tokenize that bad boy, tap into the liquidity, because it's just going to be sitting there. You bought it cash with the collateralization of your, you know, your crypto. And then boom, you get that liquidity, and you're going to tap into that to pay that loan back. Wham, bam.
Not only that, tokenized, you got the yield that you're making from the freaking tokenized property. Plus, on top of that, rental income from physical rentals on Airbnb. On top of that, man,
that's 3 different incomes, potentially four if like for example, the loan protocol pays you 10% right now to borrow against your XRP. They're paying you to do it, right? So there's 3 ways to get paid, possibly 4 if you're getting paid to borrow against it. So
once more people catch on to this and we transition from this era of everybody, which is understandable, being fearful and speculative, especially because of historical events that have happened in crypto that have kept a lot of people fearful and sidelined. But I firmly believe that in the next, like, it's going to take some time, maybe 2 to 3 years, where people are really like, okay, this stuff is not going away. And I should really start to pay attention and lock in, even though I don't know why they're not doing that now. That's besides me. But once we really get past that mindset of being fearful as a population, yo, this is gonna take the F off. Like I'll give you another example. Dude, my little brother the other day bought a car. It was not the other day, it was maybe like a month or two ago. But I just recently found out that he purchased a car, and I was talking to my mom, and I'm like, "Did he get a freaking car loan? Like, what are his car payments?" And she's like telling me that his paycheck is like always dwindling down every single week because he's paying his monthly, he's saving for his monthly payment on his car loan. And I'm like, yo, he could have put that same money into metal,
Yeah.
into Flex lending, and just took a loan out and just
Mhm.
got a car cash and paid. I don't know what the interest rate is to pay your loan back on Metal X lending right now, but I'm pretty sure it's super small. And he definitely would not have these massive high-end car payments and would be living his life still stacking at a young age his paycheck instead of using now as a 19-year-old all his paycheck to cover his insurance, his freaking, car payment, and then now he's living on his own, so his bills now living paycheck to paycheck because of a freaking car payment.
Dang, man, we need to get him on a Well 28 Zoom call. We need
Dude,
to
bro.
put him on the Zoom call, bro.
And so I guess the full circle that thought process is I'm like, yo, when more people realize they don't have to get stuck in that bullshit system, like where it just everybody's living paycheck to paycheck because of debt to cover expenses and stuff, when in reality now we have this new era of finance where if you do have the capital, you can go situate it, get a loan against it, pay that loan back while earning yield on it, and it's instant, feeless, right there in your freaking pocket. No middleman, no intermediary. No, just like freaking Paul said here in this post, man. This is so clutch. Financial freedom instantly and open line of credit using your digital asset holdings as collateral. No forms, no approvals, no drama, right? Like
Right.
this is so much better. But people are still like, oh my gosh, this isn't the future. Yo, yes, it is.
It absolutely is. And yo, WebAuth wallet, they got some ties to the Cypher card, which I shared it with the community a couple weeks ago. But yeah, I think the Metal page just commented on one of the Cypher card posts. But that Cypher card is pretty dope. It's what does it have? It has a $500,000 limit in like you can one purchase, one swipe, you can go as high as 500,000 with that card, which is pretty amazing because most swipes of the card, they limit you at like 10, 15, 25 racks, right? But the fact that you can go to 500K with that one. But yeah, where I was going with that is that basically once that connection comes to fruition, we're going to have a Visa card or a MasterCard, whatever it is, I forget which one it is, that will be able to send our rewards in this Metal X ecosystem to that card and spend the rewards that way too, as well, if that's, what you want to do with it, right? So
Yeah, you know what else too? That X just said in the chat is that prices are going to be so much higher in the future, pricing out a lot of people. The best part about accumulating all these assets now, if you have good conviction and patience, is that you're giving yourself so much buying power now, buying these assets for pennies on the dollar. Because when they do really experience price appreciation and you want to lend them out and take a loan against them, it just gives you so much more buying power compared to somebody that got in late. For example, right? People that were buying Bitcoin back in the early, let's just say, days when Bitcoin was below, I don't know, $5,000, right? Has so much more access to capital now to lend out their Bitcoin and borrow against it compared to somebody that's now buying Bitcoin today that has to go spend $110,000 or whatever Bitcoin's at right now to get one Bitcoin.
facts.
Right. So if you're in the market now stacking bags, maybe you're not earning yield on your assets right now. And that's fine as long as you're learning about it. So that way, when the time comes, the regulatory environment is clear and the environment secure. When you do have that buying power because your assets freaking blew up in terms of price, you have that buying power to go and leverage your assets to get yourself exposure to things that you want, houses, cars, whatever the case may be, without having to sell your assets and get stuck back in traditional finance. Dude, this is so what a time to be alive.
Yeah. Yeah. This tech, man, this is the reason why I love the tech, right? Like, I don't know why others preach why they love the tech, but this is the exact reason why I love the tech, because you can create cash flow and generate cash flow and yield for yourself. And these historic lows, let's face it, we've been talking about it for how long? We're still front running the institutions on a major level. Yeah, they're testing it and might be playing with little money, but like the institutional money's not here yet. So like, let's face it, once it does get here, these all-time lows, some of these lows right now, they're going to be left in the dust and never coming back.
I got a video, bro, that says that from I think it's from Sandy Quill, that says that we're beating institutions. You want to play that real quick, just so that way people don't think you're capping, bro? I know I got it. I got timestamps for everything.
Yeah, play that.
From pilot to production. Hold on, let me find it. Production, institutional use cases. Pretty sure it was Sandy Quill. If it wasn't, yeah, I think it was. Hold on, I got it right here. Let the commercial run. Then I want to get back to this other milestone talking about HBAR, and I want you to play that freaking video from.
Oh, yeah. I got to find it. You got tagged in it as well. So hold on. Let me see if I can find it. I did find that the link for the 2 awards that they're nominated, Metallicus, they're like the finalists or whatever. So we'll see if they end up winning.
Here's that video from Sandy Quill 2 weeks ago. As a matter of fact, she said this. So this is relevant, y'all. This is a recent panel discussion out of East Summit. Sandy Quill, Franklin Templeton. By the way, she also has active credentials at the World Economic Forum as a board member, the DTCC as a board member, and she also is a board member or plays some high-end role at the CFTC. So she's not somebody to just ignore in terms of when she speaks on stage. She knows what she's talking about. Listen to what she says to coexist with what Aqua just mentioned, how we're still beating institutions as retail investors.
I kind of have a little bit of a different point of view on this one. And I feel like it's kind of a cheat because you should really be answering this question. But I will do my best to answer for you. I would argue that retail has beaten institutional to this space already. That retail already understands the crypto markets far better than any institutional players understand them at this point. And that the capabilities and the functionality that the institutional financial services markets are going to need to develop are all coming now from the retail side. The gamification, the social interaction, the inclusion of short form video as forms of instruction, the ability to take actions on one's own that equate to what institutional players can do today, the ability to transfer assets peer-to-peer. These are all activities that retail are used to, and they operate with day to day in their everyday life. It's our institutional industry and it's our institutional rails that have kept us from keeping up with that level of innovation.
We're going to agree.
Yo, I appreciate that shout out. She was basically giving us a shout out and everybody here who participates as well. So
literally, bro, how does it feel if you're not one of the retail influencers that's just always filling people's head with the bullshit dopamine price predictions? Then you are part of the crowd in which she's talking about. You are beating institutions. You're paying attention to the right information. You're learning about digital wallets. You're learning about crypto. You're learning about blockchain. You're learning about embedded finance and wallets and this and that. And you're not focused on the immediate price appreciation. You're focused on the long term. You are beating institutions. So pat yourself on the freaking back. Right?
Facts.
That's a powerful statement, bro.
Yeah.
Considering where we're at.
Yeah.
When we got freaking milestones like this being reached. Shout out to all those HBAR holders that flooded loan this week.
Yo, what is the TVL2, by the way, right now? I haven't checked it today. I got to go check this real quick because the last time we checked.
2.3 million.
Yeah, 2.3. Yes. Oh, shit.
2.3 million HBAR being put to work right now on loan protocol in 2 days, 48 hours after launch.
Man. Numbers.
So in terms of an annual rate, let's just do this in terms of the total. So if 2.3 million, let me mute you real quick because I don't know why we're echoing. It's weird. So 2.3 plus 5%. So right now, this pool in and within itself is making $115,000 in yield per year. $115,000 in passive income per year. So think about this in the future, where you got all these bullish moon boy prices in your head, okay? And let's say H bar, you have enough and your portfolio goes to $2.3 million yourself in the future. Well, if this API, because it does fluctuate, it's not locked in at 5%, but I think that 5% is a pretty stable APY, considering that Litecoin on this platform has been paying way over 5% for freaking months on end. I don't think I've ever seen the Litecoin API drop below 5%. Right now it's trading at 21%. So let's just say in the future, you got an onset of people that want to sell their $2.3 million portfolio in HBAR for fiat, or you got the smart people that go and that just put their $2.3 million in this lending pool on loan protocol, and they make $115,000 in passive income per freaking year. And if they need that $2.3 million, they can just borrow against it.
Facts. And most people have HBAR, XRP, XLM. So that's just your HBAR bags generating you that $110,000 cash flow annually. Who knows what your XLM bags, what your XRP bags, what your metal bags, what your XPR bags are going to be doing. You feel me? So
yeah, passive people, like, you know, it's going to be the cool conversation in the future once everybody's mindset really shifts. And as an influencer that makes content, I'm super excited for when ignorant people on the internet finally wake up and realize that the conversation should not be about the price of your assets in the future, but instead, who's making the most passive income each month.
facts, bro. Facts. Because we got receipts over here, what we're making monthly. So,
you know, if you're not making $4,000 plus in passive income in the future in this crypto ecosystem, you did it wrong.
Really wrong. Because yeah, that, man, well said, bro. Well said. That's a solid number too, to be honest with you.
I'm just being honest. Like if we do see massive price appreciation and you fumble the ball and you sell for fiat and you're not making at least the minimum after this next bull run or also massive blow off top, whatever anybody's expecting, you really do surpass a couple $1 million in your portfolio and you're not making at least $4,000 a month in passive income, you didn't do enough research. Because, man, just with the $1 million portfolio, $4,000 a month in passive income and DeFi is 100% achievable.
Easily achievable. Are you kidding me? Easily achievable.
And I just say $4,000 a month because $4,000 a month covers all my living expenses. So I use my own personal example. Your goal, right, in terms of retirement or financial freedom should be to make enough passive income to supersede your everyday expenses, right? I think $4,000 is pretty freaking reasonable per month.
Yeah.
Man, yes. Loan protocol is freaking killing it. And so, you know, this just leads me over to this post because you got Sandy Qual sitting here again, spitting freaking gems, where she says in this interview, shout out to The Defiant. The Defiant is a YouTube channel that people sleep on. They have hardly any views. It's crazy, but they have so many different good panelists on their platform. I want to play this video clip because Sandy Qual literally says that lending, borrowing, and liquidity providing are going to be the future of finance. They're going to define the future of finance. So listen to what she says here in this post.
Collateral, the higher transparency.
DeFi aspects, there's permissioned lending involved, and you know, KYC involved. What do you think of that space? Is it? I know it's like very early, but is that something that you'd explore, or what's missing for you to use it?
100%. We're super excited about this space. We're just waiting for the regulators to give us a little more clarity on how they want us to treat a registered product in these pools, right? So we're very big believers in liquidity pools. We believe that liquidity pools are going to be a standard part of the future ecosystem. We're very interested in lending protocols and being able to incorporate our Benji product suite into lending protocols as an option other than stablecoins for that reason that we were talking about before, the higher yield, the more stability around the underlying collateral, the higher transparency and third-party custody that they provide. right? We think that that's going to be a very popular use case. We're working with market makers to begin to be able to make markets against major tokens for our money market funds. So as soon as the regulators kind of give the go-ahead, you'll see us really entering from many different facets of the market, because we really have such conviction that these are the models that are going to really define the future of finance.
Interesting.
And she said, like, categories. So we've also heard her say meme coins is one of those categories that they're actively participating in, right? So it's like the whole pie in crypto is what they're going to be going after, the whole pie.
I think that we're at an age, bro, where you have a lot of believers in the assets that they hold. So you have a lot of these tribalistic communities that are like XRP believers or Bitcoin believers or whatever, right? They're just like tribal with the digital asset that they hold in their portfolio, but they don't actually understand the technology and what it can do for their personal life, for their family, for their finances, to enhance their wealth. They just buy the asset, marry a bias that it's going to be some high price, and that's where they end. And they don't further their education on how massive this is all going to be. Like, this is huge to be able to live through this and to have a financial institution like Franklin Templeton with a person that has credentials that stems from the DTCC, the World Economic Forum, and the CFTC, which is now the overall regulator of the crypto ecosystem, tell you that lending, borrowing, and providing liquidity is going to define the future of finance, y'all. What? Like,
Yeah. This is so, it's like the writing is right there. They're telling you blatantly. It's
they
like,
tell you, bro.
it's up
right
to you to
your
bend your ear. Yeah.
Right to your face. It's so crazy. And this this video from the Defiant has like less than 200 views probably, bro.
Man.
So sad, man. So many people are just gonna get straight up sweat from under the rug. So that leads me over here to this post, and I want to swing back. Did you find that video of
I did.
Yeah.
And then shout out to Sean Sweeney real quick, bro. I read your comment in the chat. You're good. Don't call yourself a comment monster. You're putting out gems in the chat. So if people want to read those gems, it's on them. So keep them coming, Sean. We appreciate you, bro.
Straight up X, anybody that's commenting on our live streams, love you guys for coming in and tapping with us. Because honest to God, you know, regardless if you're in the private CYPRX 1228 club or the community at large, you're going to be the type of people that are like, yo, I was listening to these dudes back in 2025 and they were talking about lending and borrowing, and I tapped in and followed through with my education. Now 2030, after price appreciation, I'm not sitting in fiat bags, and if I want to buy a house, I know how, because I can go out and take a loan out on my digital assets and I have to sell back into fiat, get my house, tokenize that shit, all because I heard some two dudes with dreadlocks and tattoos say it back in 2025. Yeah. It's that simple.
Oh man, yes, bro. It's hilarious.
Instead, you got all these people wearing suits and ties, manipulating people into thinking that XRP is going to be some high-end price in January 2026, when that's speculative as crap. When in reality, you shouldn't be focused on that. You should be focused on how to get your XRP to work, how to pay yourself. Why are you waiting? Why is everybody waiting? I never understood that. Why the fuck are you waiting to get paid from this market? This market will pay you right now. You own, like, you deserve that. You deserve that. If you're in crypto right now, why do you deserve that? Because the traditional financial system has fucked the retail trader, the average investor, for years. And now we are in a level playing field. And if you're not taking advantage of that, you're at fault. You're just being manipulated. Pay yourself. You earn it. You go to work every single day to sacrifice your freaking time for money, and you get paid once a week or bi-weekly, or in some cases even monthly. Well, those paychecks, once you get them, should be making you more money, not just paying your bills and then wait for the next paycheck. Fuck that. Pay your bills with the market's money.
Yeah,
I am.
Yeah, me too. 100%. I definitely am as well. So
And if fuck the system doesn't motivate you, I know we're on YouTube, so we're kind of surface level on what we can say, but y'all got to get out of this mindset of just wait, hodl. No, fuck that. It's now.
Yeah, now, baby.
Now.
Yeah.
Wealth is now. Wealth is not. We're not waiting for wealth. Wealth is now. It can be created right now. You just got to stop Man, it's wild. I could go on a tangent, but we're on YouTube, so we can't. We got to dial it back.
Yeah. But I mean, when you learn DeFi though, and you understand all like the ecosystems and the protocols and how DeFi all works and all that jazz, you can start understanding things on a deeper, articulate level when people talk about their blockchain and their projects. So, you know, and when you understand that, you guys are going to understand that like there's no infrastructure for trillions of liquidity to come onto the XRPL just yet. There's just not. There's nothing here just yet for trillions of dollars of institutions to pour it in. But will there be? Yeah, absolutely. Is it going to be like next year? Well, I mean, I don't know, unless they're like Speedy Gonzalez, the dev team, and maybe they've been hiding something from the masses of what they've been building behind the scenes. But, you know, they still got to build it out too. You know what I mean? And you won't know that unless you're studying this side of the fence, DeFi, right? And yeah, so that's what I have to say about that.
I think this platform speaks volume. MetalX lending on loan protocol. People are always like, especially in the XRP army, well, I don't want to come over here and risk my XRP for 0.68% APY. Understandable, right? But that is not the point. That is not the point. If you're thinking in terms of how much yield you can earn on your assets, you're not thinking of the power in which DeFi is giving you and putting in the palm of your hands as a retail investor. So to cap on that, and then to situate this post and show you guys that it coexists with people who have valid credentials in this space, like this gentleman here that works directly with financial institutions, telling you all, now's the time to start to learn how not to get stuck back in fiat. It's important to have this route, DeFi, to not have to get stuck back in fiat. I'll play that clip in just 1 second. I said here to you guys, people who keep saying that the yield is too small are missing the point. It's not about chasing crazy yields. It's about adopting the same wealth strategy that the elites have used for decades, using your assets as collateral instead of selling them. And now as retail investors, we can do this with a mobile phone and an internet connection, if you know how. Stocks, for example. Wealthy investors don't sell their Apple, their Tesla, or their Amazon stock when they need cash. They instead use security-backed loans, also called margin loans, or portfolio credit lines. They pledge their stock portfolio as collateral and they borrow cash at low interest rates. This way, they keep ownership of the stock and enjoy dividends and capture long-term growth while still having liquidity. In terms of real estate, ask any high net worth individual. High net worth families don't usually sell property to cover expenses. They leverage home equity lines of credit or HELOCs or collateralized real estate loans. Their real estate keeps appreciating while they borrow against it to fund new ventures, pay for luxury items, or reinvest elsewhere. And other assets like arts and bonds, etc. Even in art collectibles, rare wines, or private businesses can all be used as collateral for loans through private banks that have never been accessible through retail trading. The principle stays the same. Never sell your appreciating assets, just borrow against them. You see, all these retail influencers that have high following counts on the internet have manipulated all you to sell your assets, when in reality, the elites are not thinking about how they can sell their crypto. They're thinking about how they're going to utilize it to continue to expand their freaking wealth, just like they have in traditional finance. And so many people are going to get effed because they're following people that are effing with their brain juices because of price appreciation. I'm telling you guys. You got it in the documents right here. You got these documents from banks. Look at this. If you guys are new to the call, I shared this at the beginning of the call. This is literally from the Iowa Bankers Association telling you all to enhance your digital literacy. Digital tools such as mobile banking apps, digital wallets, online payment systems, understanding how to navigate these platforms securely and effectively is essential. You can't make this stuff up. But again, because people, they're so focused on waiting for some high price to make money, they're ignoring this shift. Back to this post I said here, the big idea. The elite strategy has always been, number one, acquire appreciating assets, stocks, property, businesses, and now crypto. Number two, borrow against those assets for liquidity. Number three, let the assets keep compounding over time. Remember, the elites, they play the long game. Retail, they're always so fixated on the now, price appreciation. Oh my gosh, bullish moon boy this, bullish moon boy that. It's all a gimmick. Number four, use loans, often at low rates, to live, invest, and grow wealth without triggering taxes or losing upside potential. Think about it. You have a $20,000 investment into XRP. Life throws a curveball at you. Say a $10,000 expense pops up. The old system, you'd be forced to sell your XRP, get stuck back in fiat, and miss out on future upside potential. But the new system allows you to borrow against your XRP, get the cash that you need, and still keep your XRP working for you. The small yield that you earn is just extra collateral. The real power is staying in Web3, keeping your assets intact, and never going broke by being forced to sell. This is how true wealth is built, not by flipping your assets for freaking fiat. You're not a freaking day trader. Like,
Yeah.
right?
Yeah.
So listen to what this guy says, because he literally mimics exactly what I just said in that long ass post. And we already showed you guys proof on this call from a financial institution telling you guys that retail traders are more educated than freaking institutions. Okay. Think about that. Think about how powerful that is. Listen to what this guy says.
That you could take your stablecoin of the exchange, could do some other stuff with it, and then tokenized money market funds and T-bill products came into the market, yet increasing what we can do with our crypto. So now you can earn yield on your stable coins, but at the end of the day, that's pretty limited. I mean, first of all, they're always short-term overnight deposits, typically for 1 day. What if I want to look in 2-year T-bill rates? I can't really do that. And that's just the very beginning. Like having access to fixed income risk-free products is the very beginning. So it's really important that we don't have to go back to the fiat system in order to invest in financial assets. And I think that enabling the tokenization of stocks is a great step in that direction. Now, what I think
you literally just heard him say, a guy who works directly with financial institutions, say it's super important that we don't have to go back into the fiat system. And what did Aqua say at the beginning of this call? He's like, Aqua was like, I wonder when they tokenize stocks, are they going to be lending out their stocks and borrowing against them? Absolutely, bro.
Yeah, that was the proof right there. Yeah.
Taking a pause right there, because we got some people in the comments that are like, where can we find you guys? How can we join the club? If you guys are interested in taking your knowledge curve a step further and you want to tap in and lock in with us in the CYPRX community, head over to CYPRXtrading.com. Again, sometimes paid mentorship programs aren't for people. Why? Because you might not have the capital to keep up with the monthly fee that we require in order to access the content. So if that's the case, we provide hundreds of material and hours worth of free content on our YouTube and our X profiles, both myself and Aqua. So if you guys want the free stuff, head over to YouTube, find us on YouTube. If not, YouTube doesn't float your boat, follow us on X. If you want to take it a step further and you want to lock in the CYPRX Well 28 Club, you want to go through our comprehensive DeFi university, you want to see how we are risking our hard-earned assets to earn and generate yield on protocols that exist in the now. You want to see us take the risk and learn from our mistakes instead of risking your own digital assets, head over to CYPRXtrading.com, lock in with the Wealth 28 Club. If you guys want to take it a step further and you want to join a community of hundreds of like-minded individuals, you want access to institutional insights via institutional deltas, dark pools, you want access to fundamental breakdowns, weekly Zoom calls, over 5 to 6 Zoom calls per week, breaking down market sentiment. You want to know why today, for example, the market was down over $120 billion and freaking price on XRP is to $2.80 now as of time of recording this video or something like that. And you have no idea why, considering all the bullish Moonboy influencers probably yesterday and the day before were saying, oh my gosh, XRP breakout, all this bullshit, but that's not happening today. And you want to know why? Lock in with us in the Discord, because we cover that on a daily basis. Right?
Literally. And it makes so much sense. And when you have this new frame mindset, you make real rational, like you make logical decisions. You're not over here spazzing out because somebody said the bear market is here, it's all over. You know what I mean? The shit that people be saying just for views or whatever their emotions are telling them at the time because they don't understand how the markets move. Tap in with us, like he just said, for sure. Tap in.
You also shift your mindset from thinking that XRP price is going to hit $1,000 by freaking January. I still can't believe, bro, that there's people that believe that. You know what's so wild? You know why I'm so convicted that XRP ain't going to hit those prices? Because we have institutional information in our community, and we can't even break above certain institutional sell deltas on XRP at specific price levels. And we can see in our community where institutional orders sit with orders before anybody else in retail can because of our algorithms that we have access to. So it's like, I know that at $4.44, where there's an institutional sell wall that our algorithms have picked up on, I know that once price hits that level, there's going to be profit taking because there's institutional sell volume that sits there. At $5.17, same thing. Our algorithms have picked up on institutional sell delta sitting there waiting to trap buyers at those levels to sell on retail. And nobody else in the internet knows that.
Nobody
Except our
knows.
community.
The delta zones are so clutch, bro. So clutch.
Anyways, I'm not here to talk about that, bro. I want to. Who was the guy? It's Lehman Beard, right? I shouldn't say the guy, the CEO of Hedera.
Yeah.
Right?
Yep. Lehman Doctor. He's got the doctor title. So Dr. Lehman Beard. Yep. You are correct.
And the video that you played me, which we're going to play today, coexists with this post and the update from the Q2 report and from Metallicus 2025.
Right.
They're talking about the WebAuth wallet, you know, how it's being integrated for both institutions and individual users. I love the Metallicus ecosystem. I said here in this post, the entire ecosystem can earn you passive income directly in a wallet that's built for both institutions and retail investors. Simple and easy user interface, compliant with AML, KYC. You can trade, lend, borrow. You know what I didn't even think of, bro? You got the ability to have the MetalX bot make trades directly for you in a freaking WebAuth wallet. Like,
yeah, 100%.
Borrowing, staking, yield farming, liquidity providing. We're moving from an account-based system to a wallet-based system, and WebAuth is leading the charge in that. So I don't know if you wanted to play that video clip.
Yeah, let's play it because he doesn't. So basically, let me just give basically an intro, right? So he's going to talk about a wallet, right? But he doesn't necessarily name WebAuth wallet, but based on what he breaks down and what your knowledge of WebAuth wallet and other wallets in the, in the game, who do you think he's talking about, right? And shout out to XPROG. He was the one that I believe sent me this, and then shout out to Patriot Joe as well, and then shout out to Sean Sweeney as well because he sent me some information as well on this as well. So hold on, let me share my screen. But I know you guys are in here, so I got to give you guys a shout out because you guys definitely tagged me in this stuff. So, all right, hold on. All right, so yeah, here we go. And there you are too. You're tagged in this one as well. You see your name right there. But let me just enlarge it here and hold on, press play.
Benjamin mentioned it needs to be invisible. Mark mentioned it needs to be invisible. May mentioned, custodians aren't ideal, but they're a 90% solution. We need to be moving in this direction and setting it up for people. Look, the average person doesn't want to deal with complexity, doesn't want to understand these things. You need to set it up. And we have people setting up right now for banks and for credit unions.
We have people setting up right now for banks and credit unions.
It's two different organizations where when you set up your account with the bank or the credit union, you get a crypto wallet and it automatically picks two other banks or two other credit unions. And the three of them together are your helpers invisibly. Automatically, you don't have to know about it. You don't have to think about it. You just get that level of protection. And then if you are an expert, you could add more helpers. You could remove those helpers, man. You don't trust those helpers. Fine, go get some more of your own. You have total control. You have the self-sovereignty. It's your keys, your crypto. It's invisible for the person who doesn't know any better. And we have got to set up these invisible safety nets for.
So that's that, right? Like, in my opinion, he's talking about the WebAuth wallet 100%. And the fact that I want to know, like, what else this man knows, because he's basically saying the banks and the credit unions are going to be like teaming up. Like he just said, like you'll have a bank, like a bank you won't even know, and a credit union you won't even know, three of them that are basically helping you out and protecting you, right? Like, and who has the ability to give these banks to communicate on that level through subnet? Well, the Metal blockchain. The Metal blockchain, BSA compliant, aligned with these credit unions, aligned with these banks. Not to mention the WebAuth wallet. I'll keep preaching it. It's an open source wallet. So ABC Credit Union, Bank of America can come in and say, hey, we're adopting this digital wallet, and it's going to say our name on the wallet, and their credit union member or their bank customer is going to download that wallet and think that wallet belongs to that bank or credit union, not knowing that they're low-key using the WebAuth wallet.
I think to back your speculative theory that Lehman Beard is talking about the WebAuth wallet, it's just like when is the time frame of that particular video? Does anybody know?
Yeah, so this just came out this week. So shout out to Generation Infinity. That's where the full interview was of that little snippet of Dr. Lehman. But yeah, it was this week. So
So same week,
hold on, let me see here. Yeah. So this week, yeah.
Same week that
August 14th.
HBAR, same week that HBAR goes live on Loan Protocol, right? Same week that, well, I guess not the same week, a week after this announcement from Metallicus came, right? And this announcement, for anybody that doesn't know, this is from August 20th, 2025. And you heard Lehman Beard say, banks and credit unions, Metallicus, a leader in blockchain tech for financial institutions and a core developer of the Metal blockchain, today announced it has been selected as the first platform partner for Valera's newly launched digital asset labs. Led by Valera, the nation's premier payments CUSO and integrated financial technology solutions provider, the lab is designed to help credit unions lead in stablecoins and digital assets through industry engagement, education, strategic partnership, and pilot programs. CUSO is Credit Union Service Organization. So, I mean, what did Sean say? The only other wallet I think he could be talking about is the Bank Social wallet, as they went live with Secure and the Direct Alliance. Possibly. It's speculation, right, that we're throwing in the mix that he could be talking about WebAuth. But regardless of who he is talking about, WebAuth at a minimum meets the requirements that he was
100% it does.
talking about.
Yeah, 100%. I don't know much about the Bank Social wallet. I know it has like HBAR, the Hedera chain is like connected to that wallet somehow. But like, other than that, I don't know what that consists of and how that would work on that side of the fence. So
yeah, I'm ignorant on the BSL ecosystem as well. I stopped paying attention to that a while ago. Once all that drama happened, it just kind of didn't sit well in my stomach, honestly. So
yeah, it didn't sit well with me either, bro. I had to ditch it low key. So yeah,
I wanted to let that breathe as well. Yeah, so last post that I want to play for you guys, just to solidify and full circle all of this, is this gentleman again here from PVO1 that works directly with institutions, mentioned that they are in the process of working with a hedge fund who wants to lend crypto and borrow against it as collateral. So I want you all to hear this last statement, thinking of everything that we showed you guys today. If you came into this call late, we started off the call. As a matter of fact, I'm going to full circle back to that before we jump off, because nobody on crypto Twitter that covers XRP covered this breaking fundamental today the way that we did, where we had the announcement from Gummy pronounce an acquisition of $2.5 billion in yen worth of XRP as part of their strategy to grow their blockchain business. And we broke down in detail how this XRP and this DeFi strategy in correlation with SBI holdings is likely going to be utilized for yield generation. Nobody else covered it that way. And I just wanted to show you guys how mind manipulated people are, because you would think, right, as much hype as this announcement is getting from the XRP army, that it would cause some type of price appreciation, right? Wrong.
Yeah.
Wrong.
Yeah.
Why?
Yeah.
Because the XRP that's acquired, if it is acquired right now, it's not active in DeFi. It's just purchased and then it just sits dormant, does nothing. But when this $2.5 billion worth of XRP is utilized in DeFi, then the rocket boosters will come on.
Facts. That's major facts, bro.
And that's why it's important to understand these things. When you understand the mechanics behind what these announcements are and why they're important and what they plan to do with these digital assets, that's when it becomes important. Not when you're expecting price appreciation, which is aimless and never comes into fruition, because the people that are touting these price appreciation don't actually understand the mechanics behind what creates demand for the said digital assets. And right now, a lot of demand in said digital assets, especially like Ethereum, sitting in the number 2 spot, is because it holds that position in DeFi, with TVL sitting in the billions.
Yeah. Those paying attention, those price predictions and shit is scary. Cause like I heard somebody on their live talking about all right, let me change my price prediction. And people were bending their ear like that is such a crazy thing to just be following along with. That is lethal. I think that's one way to get flushed out of crypto.
It's the biggest
what I mean?
cancer in the space right now, bro. The
Yeah.
biggest cancer in crypto right now. I mean, people that know for likes and views are coming on their social media platforms and acting like they got a crystal ball.
Yeah, bro, it blows my mind. It blows my mind. It's setting people up with the wrong expectations, and they're not thinking properly, and having the correct game plan. Like everyone's game plan is so like it's like they found crypto and then they took all these like archaic old ways of doing things and then like try to like put them in crypto and make themselves sound smart. Like we should hodl and we need to, take profits and sell at this price point. And it's like, bro, that shit's so ass backwards, bro. Like you are not helping people by repeating this shit, bro. Like you're not. Like
they're making everybody think that they're day traders, but they're not. You know how many people have no idea how to exit their market and reposition back in at a discount because they're never going to know when that's going to be? They're just going to
Never.
speculate on it. They don't understand fundamentals, bro. So many people are going to get wrecked this next cycle. It's so sad. We're here trying to help. That's all I'm saying. Boy, you can lead a horse to water. You can't make them drink it. So let's listen to this guy here say that hedge funds are going to be the ones who want to lend crypto and borrow against it. So you can just hear verbal confirmation that they are wanting to do this. Okay. Take a second here and listen.
Next to the classic blue chip crypto, right? BTC, ETH, whatnot. Do you think it's stocks? Do you think it's real estate? Do you think, well, what type of assets do you feel like will, unlock the most, or should we start with as an industry?
I have an example. At my company, we're working on a deal where a well-known hedge fund wants to lend fiat into the crypto ecosystem, and they're potentially happy to receive crypto collateral, but it needs to be structured in a certain way because they can't actually really touch the Bitcoins in a normal wallet. It's not in their mandate. What they're looking to do is to receive one of the Bitcoin ETFs. So they're comfortable with the economic characteristics of the assets, whether it goes up and down, whether there's a chance like jump to default or something like that. But it's a question of, again, kind of like access, but the other way around. We tend to talk of access for, how does the little guy have access to those products? It's also a question of the institutions. How can we give them access to that type of stuff? So Bitcoin as an asset for collateral is actually, widely accepted in terms of its underlying characteristics. The question is the specific format doesn't always work. So in that case, it's kind of like the other way around. Just like we were talking of tokenizing Amazon stocks on chain, we're also sort of like reverse tokenizing Bitcoin for the institutions so that they can have access to that. But the important thing, you mentioned that if we remove the buyers, liquidity.
So I'll pause it there, right? He just confirmed that they're working with a hedge fund that wants to lend out cash to borrow crypto against it, which just goes to full circle pretty much everything that we shared in today's video breakdown, that these institutions are for a fact going to participate in DeFi. It's just a matter of what, like Sandy Claw said, regulation. And once that's clear, the floodgates are going to freaking open. And just like Vision said on today's call in the comments, a lot of people are going to get priced out thinking that we're in this 4-year market cycle still, where everything that happened prior to institutions getting involved in crypto is going to continue to happen now after the institutions are in, right? I don't see that happening. I think that once we get the regulatory green light and one of these institutions does it, all of them are going to know that if they don't do it, they're going to fall behind in terms of everything, in terms of what they can provide to their customers, in terms of revenue generation, in terms of their back-end business model. If they don't do it, they're going to risk falling behind. So that means that all of them are going to do it. All of them are going to do it. And it's going to take time. It's not just going to happen when the flip of a switch overnight. And it's going to seem gradual, but then it will be sudden. And we are on that turning point where now is the time to start to lock in and focus on your education and not all the bullcrap that these influencers are touting out to you guys that you're going to survive because of price appreciation, and that's it. It's going to take strategy. It's going to take resilience. It's going to take understanding in these digital tools to utilize them to benefit, whether it's lending, liquidity providing, all the things that I talked about in the previous post, right? That's what you should be learning. Okay. So, anyways, that's my spiel today. I'll full circle back to this post. Last but not least, this was the Gummy announcement today where they mentioned a purchase of $2.5 billion worth of yen in XRP. And so I broke this down in detail. There's not one other person on the internet that broke it down the way that we did here in this community in the Wealth 28 Club. So what most are missing about this announcement? Months ago, Gummy and SBI Holdings partnered to launch a crypto asset fund. What many overlook is that SBI is now the largest shareholder in Gummy, 22.46% after investing over $52 million. Fast forward to today. Gummy announced the purchase of $2.5 billion in yen worth of XRP. Their statement directly in their post says that they're aimed to expand revenue opportunities. This lines up perfectly with SBI's broader strategy. What is SBI's broader strategy? In their partnership with Gummy, it revealed internal trials that outperformed simply holding Bitcoin by using DeFi style methodologies. So right there, you have a financial organization telling you guys that the people that just held Bitcoin compared to the people or the organizations that tested out this strategy to implement DeFi, like staking, DeFi income generation, rebalancing digital asset positions, they yielded so much more money than people that just held. Think about that. Because think about what we're trying to tell you guys. It's the same thing with retail. The people that learn DeFi are going to make so much more money than the people that just hodl and sell for some high price. It's guaranteed almost. Like anybody with a brain can see it. Go ahead.
Yeah, it's super guaranteed because you gotta, you're stacking your bags, you're stacking more bags with your bags, putting them to work. And that's just an additional cash flow to stack more bags on top of however you're, already presently buying some of these bags. You know what I mean? So participating in DeFi just beefs up your portfolio, like legitimately. And the more you know, the better, because now your portfolio could beef up on steroids after, a certain amount of time. Not some overnight shit for sure, but yeah, definitely over time, it could definitely beef up. You know what I mean? So
here are the fundamentals, right? To just put the pieces of the breadcrumbs together. This is the announcement where it says that Gummy established a strategic partnership with SBI Holdings. Here it talks about the $52 million investment SBI Holdings made into the firm's, investment, 22% shareholder in Gummy. And then here, this is where it talks about how Gummy will jointly establish a crypto asset fund with SBI Holdings to manage listed digital assets, leveraging their combined expertise in blockchain and finance. And then here it says what they plan to do. It says right here, management will be handled by a new limited liability company in Tokyo with SBI holding a 51% stake. Gummy said the decision follows a successful internal trial that outperformed Bitcoin price movements using the strategies such as staking, DeFi income generation, and rebalancing. It aims to eventually expand the fund for retail investors. That's important. So think about this. Over the past year, for the first time ever, we've been looking at XRP DeFi capabilities coming online. Lending, borrowing, yield farming, liquid staking, all these things that have never been available to retail investors in the XRP army. And now you have organizations publicly acquiring XRP that have tested DeFi generation strategies, and look at what they're saying in their post. It says, the contributing expansion of the XRP ecosystem is what they're buying $2.5 billion in yen worth of XRP. And it says, in liquidity network strategy primarily promoted by SBI Holdings, we aim to expand revenue opportunities in that business. They're literally going to most likely be using this XRP for DeFi. Word for word, exactly from them. You can't make this stuff up. This isn't going to result in some price appreciation right now on XRP. No, instead, you should be focused on the fact that an institution just purchased, in terms of yen, $2.5 billion to do what with their XRP? Put it in yield generation strategies. If that's not an eye opener for you, I can't.
I don't know what is.
I don't know what is. I don't know what is, man. I don't know what is. Lord help them.
Yeah, bro. That's I mean, too, like just the taking it back to like Metal blockchain and these credit unions, when they decide to have their own blockchain within the Metal blockchain ecosystem, by default, they have to have a subnet. So they're going to have, and to have a subnet, you have to have 5 nodes. And running a node, that's a yield generating thing, right? So, you know, think about it that from that aspect as well, too. It's like, it's in this credit union's almost benefit to have their own blockchain in so many different ways, because having their own blockchain is now going to yield them a stream of income as well, because they have to have, again, 5 nodes, and each node has to be a minimum of 2,000 metal. So that's like 10,000 right there out the gates. And that's if they just hit the bare minimum. I mean, you're talking billions and trillions of dollars. I'm pretty sure they're not going to just say, hey, give us the bare minimum. It's going to be probably some massive number, like you see now with Metallicus having their nodes. They got 800,000. They got like 10 different nodes with 800,000 metal in each of them. So,
Yeah, and I'm telling you, bro, after the CYPRX link up in September, I think in October we should really buckle down and figure out how to do the subnet with everybody that's running a node. Just build our own subnet. Were you on that call where we talked about that? Where we talked about building our own subnet?
No, I don't think I was on there. No, I missed that one.
Because it only takes 5 people to run a subnet. 5 people that have a node.
Man, yeah, we're gonna have to take that convo offline for sure.
Yeah, I think that's definitely in the near future. So 2,000 listeners in today's call. Really do appreciate you guys for tapping in with us. As always, can't stress enough. Now's the time to educate yourself. If the paid offering that we guys have for you to chime in with us in our community in the Wealth 28 Club and the Discord is not fit for you, a lot of people are always like, oh, you guys do all this pays to blah, blah, whatever. We have so much free content for you guys to analyze. It's not even funny. Come over here to the CYPRX trading website, tap in. You guys can click directly on the website here, and you can follow the YouTube link is directly up there. And on the YouTube, if you guys want free information on yield generation, all the opportunities that you now have, click on the playlist tab. And if you come right down here, there's a playlist that's publicly available for you guys that has over 60 videos in it titled Yield. And you guys can click on it and you can watch all that content for free. And it's probably hundreds of hours of content in regards to yield generation. You can also just watch the videos on the CYPRX YouTube, where we have past podcasts. We have a whole bunch of informational video breakdowns, research, detailed, thorough information, no hopium price predictions, or none of that bullcrap. You come over here to Mr. Aquaman's YouTube. He is constantly dropping gem after gem after gem, right? So come over here. You guys can follow Mr. Aquaman's YouTube for free. Whole bunch of free related content. If you guys, again, don't want to tap into the Wealth 28 Club, you guys can also find myself over on X. Come over here. You can see my X profile is at @CDemanicore. Constantly dropping gems, documented research, updated video analysis, panel discussions, breakdowns, all free related content, just keeping you in a loop with what's happening. No Moonboy price predictions, just real thorough research, documented entities, and institutional perspectives from some of the largest organizations in the game. Same thing with Mr. Aqua's page. Come over here. No bullish Moonboy hopium or hype. He's constantly giving you guys updates in the Metallicus ecosystem with what's going on in DeFi, all things related to DeFi and Web3, right? Then if you guys do want to take it a step further and you want to lock in with us in the private community, head over to CYPRXtrading.com. You got the Wealth 28 Club. You got the Discord, a storehouse of information, knowledge, and things that will just take your level of information, the way that you view these markets, to an unprecedented level of awareness, right? Now it's not the time to be sitting there idle on your education, thinking that you're just going to gather all the information that you need from YouTube and Twitter. That's not how reality works. And if you want to take it a step further, I personally suggest locking in with us, because you're not going to get any of that hopium, that crap. You're going to get people with market experience. We have people in our community combined. The mentors in our group have over 20 years of market experience, including 13 years of hedge fund experience. You cannot find that in any other community on the internet right now. So with that being said, blessings to you guys. Aqua, that's all that I have for the people today. If you have anything to say it now. If not, man, blessings to you, bro.
Yeah. Not much love to everybody, as I always say. Yeah, I'm good.
See you guys next Friday. Yeah, that's all I got for you guys. Everybody, peace, love, and blessings. Be prosperous over the weekend. Be productive. Don't be sitting idle. And I'll see you guys in the next podcast, man. Aqua, as always.
Later, brother. All right, peace. Bro.